In this video, we're going to be looking at the concept of support and resistance. An important thing to remember throughout this video is that resistance isn't just based off a horizontal overlay. It can be rising, it can be falling, just the same as support. So, some of the objectives discussed in this video will include concepts such as price barriers, polarity flips, static price barriers, dynamic price barriers, and the final one that will be discussed in this video, numerical price barriers. So, let's get started. To begin, price barriers are levels in price which are likely to trigger a reversal. Support is when price reverses from above a price barrier to the upside. Resistance is a different one to this. This is when price reverses from below a barrier to the downside because there maybe isn't enough buying pressure, so the asset starts to fall. With support, there maybe isn't enough selling pressure and the buying pressure is greater than this, and that's why the price would reverse to the upside and bounce off this level of support. So the simplest way to find support or resistance is to look at prior support / resistance levels. When there is a price level that acted as a price barrier in the past, it's likely to act as a barrier to price again, like shown in this example. So we've got an example of a resistance level, we can see from this point, and price tested from below, we can see here, tested that resistance point once and reversed to the downside. On the second occasion, it tested it again and reversed to the downside. So on both occasions, price reverses to the downside from testing the resistance. So most support and resistance levels won't hold forever. Eventually, price usually breaks through them. So when that happens, a polarity flip is when a prior resistance now acts as a support, or a prior support level now acts as a resistance. So in the example we've got here, the price falls below a prior support level. This is the prior support level. It's tested again and price breaks down below that. Now you can see that level now turns into a resistance level, and you can see two reversals to the downside occurring from that level. So we've got this one and then we've got this one. The support, the prior support, has now become resistance. That is an example of a polarity flip. So now we're going to look at static price barriers, and these are simply horizontal price levels of support and resistance, these barriers. The price level of the barrier is the same at every time point. So examples of static barriers include prior support or prior resistance, as we've already seen, Fibonacci retracement levels, floor traders pivots, Gann levels, and minimum one-to-one projections based on chart patterns. So let's look at an example here. This is one of how some static price barriers could be used to identify reversals in Boeing shares. So we've got these red horizontal lines all about, and they are showing an overlay called floor traders pivot points. The price regularly reverses from these levels, as we can see here, acts as a level of support. This is a rough level of resistance, again, all throughout these blue arrows shown on the diagram. Now, the price regularly reverses from these, using them both as support and resistance. So these are horizontal levels, these static price barriers. However, not all price barriers are horizontal. You can also get dynamic price barriers that are diagonal. They can be used as support or resistance, just like static barriers though. The price level of dynamic barriers changes depending on the time that the price tests them. Examples of dynamic barriers of price include trend lines, speed fans, Gann fans, pitchforks, and channel lines. Most are probably quite familiar with trend lines, but some of these others are interesting ways to also use dynamic price barriers. So let's look at an example real quick. So here you can see an example in dynamic price barriers effectively identifying reversal points, and these reversal points can be seen on Apple shares. So the diagonal red lines here are from an Andrews pitchfork, which is essentially a dynamic overlay. And again, you can see how price will use these points as barriers. You can see for either support, in this case support, or resistance in these 2 points here, shown by the blue arrows, depending on whether price is above or below the barrier when it tests. So in this case, the price is below the barrier, that is resistance. In this case, the price is above the barrier, and that is support. Let's just go to a random point here. The price is below the barrier, so this is resistance, and a final point here, the price is above the barrier, so this is a level of support. Now we're going to look at numerical price barriers. So this is the final one we're going to look at today, and these numerical price barriers are calculated numerically based on price data. So you can get support or resistance, whichever one you desire to look at, based off a calculation. They can fluctuate with price though, so they don't have to be horizontal or diagonal. They don't even have to be straight lines, but they can still act as support or resistance. So examples of these include moving averages, Bollinger Bands, fixed percentage bands, Keltner bands, Ichimoku clouds, and a favorite for those who may have read Turtle Trader, Donchian channels. So here's an example in practice, the final example for the video, and we've got a setup here of fixed percentage bands acting as support and resistance for the S&P 500. We've got the S&P 500 index here, and these are the fixed percentage bands. You can see we've got three different areas here. They're acting as support in this case and resistance on the higher end case for the S&P 500 index. So the conclusion we can make from this video is that the concept of support and resistance is crucial to technical analysis. It's simple, but it's important to know before moving forward. And this is because there are so many chart overlays which are designed to help you find likely areas of support and resistance and will help you anticipate reversals in price.